think we need more demonstrations of success. And I think that we need to see some of the demonstrations of success monetized, which is to say, after a project has been de-risked, after it's producing at nameplate capacity, I think what you're going to see with increasing frequency are larger companies with lower costs of capital, higher liquidity, coming in and taking these things over. Check writer, not an issuer. What is worst for them is best for me. I would suggest that the market is morphing in a way that you and I described that it might morph beginning a year ago, which is to say differentiation qualitatively. The high-quality issuers are having no trouble raising money at all. They're having oversubscribed issues, and they're having oversubscribed issues at prices that are very, very, very consistent with market conditions. The rest of the market, which is to say the lame, the halt, and the blind, are having difficulties, as they should. You will note that when the Lundins go to market, they get money. When the living legends that we have at the Boca Raton Investment Symposium go to raise money, they find money. The market is much less forgiving with junior mining companies that can't demonstrate at the offset what purpose they might fulfill for society and for investors. So I think we are seeing a segregated market, and I personally believe that that's a healthy thing. Certainly, the market is less inclined to lunacy than it used to be. I personally believe, with regards to Equinox, that the market is skeptical about their ability to bring in the hard rock deposit in Ontario on time, on budget. The market has seen so many failures in Northern Ontario in the last 2 years that they're skeptical about this billion-dollar project. I happen to believe, knowing Ross Beatty and knowing his team, that they will bring in the deposit on time, on budget, at nameplate capacity. And if I am correct, if they do that, I think that the stock will re-rate substantially. With regards to Equinox, it might be that the overall market conditions lead to a skepticism that wouldn't normally exist around a Ross Beatty company. But certainly with regards to Equinox, you can point specifically to what the market considers to be a difficulty. And of course, some of Equinox troubles have been self-inflicted, which is to say the cost creep that they experienced in Mesquite. Now, to their credit, they fixed that. There was also concern about the fact that they operate in West Mexico, where they are hit both from a less mining-friendly regime in the form of AMLO, Mexico's idiotic president, Mexico's president, and also, of course, by the prevalence of narcotraficantes in Western Mexico. But I would suggest to you that the principal malaise that's confronting Equinox is their ability to deliver, or the market's perception of their ability to deliver, their Northern Ontario construction project on time, on budget, given the incredible failure of the industry as a whole to meet expectations that they themselves guided in newly constructed projects in Northern Ontario. I think we need two things. I think we need more demonstrations of success. And I think that we need to see some of the demonstrations of success monetized, which is to say, after a project has been de-risked, after it's producing at nameplate capacity, I think what you're going to see with increasing frequency are larger companies with lower costs of capital, higher liquidity, coming in and taking these things over. The confidence that the industry will get both from successful completions, which have been frankly rare, and then monetizations, I think will give the developing community some of the cachet that they enjoyed in the latter half of the last decade. The best database around that, I think, is the Agora publishing database of people who are willing to pay for investment information around natural resources, precious metals, and hard money. The indicated active database there is in the 500,000 people range. My own database, new additions, net of deletions, in the Rural Investment Media database, which is primarily mining focused, although we do talk about oil and gas and some other commodities, has about 80,000 actives. So I would suggest that the numbers that you're quoting are very, very, very wrong to the negative side. I think the difficulty that you're seeing is that the number of aspiring public mining companies relative to the universe of investors is too high. And the investors are less stupid than they used to be. The issuers prefer stupid to smart investors, particularly the industry that's represented by the lame, the halt, and the blind issuers. And I'm afraid that the lame, the halt, and the blind is the overwhelming number of issuers. If you look, as an example, at promotional groups who make a deliberate effort to communicate well with their investor base, and also deliver results. As an example, Amir Adnani with his range of companies. He has absolutely no trouble raising money, $20 or $30 million at a crack. He has absolutely no trouble maintaining trading liquidity in names like UEC above 500,000 shares a day. And he has an active investor database through the combined companies at 90,000 people. It isn't as easy as it used to be. That's because the mining industry as a whole has abused the privilege that it enjoyed for the last 30 years. One of the things about having a 90,000 person database is that your share price reflects your promotional efforts in addition to reflecting the assets that you control. The criticisms in the short report, which is to say excessive G&A, one needs to ask themselves, excessive with regards to what? The promotional expenditures are very high, but their cost of capital is very low. Is there a trade-off? Individual investors will have to make up their mind with regards to that. It is alleged, I won't confirm or deny, that 25 or 30 years ago, I was active in stock promotion. If it is true that I had been active in stock promotion 25 or 30 years ago, I would have welcomed a large short position. A large short position indicates stock that has already been sold and will have to be bought. In other words, a short ticket is a buy ticket. The question is, what price will it fill? If the spokespeople are right and the company's assets are decent quality, that short ticket will have to be filled at a higher price. If the shorts themselves are right and the company's aspects are suspect, that short ticket will be filled, but it'll be filled at a lower price. For me personally, having a high-quality issuer with a very large short position against it is a wonderful thing. We battled the shorts in the formation of Bema Gold, and we murdered them. We battled the shorts in the early days of First Quantum, and we murdered them. We battled the shorts with Silver Standard and Pan American. We battled the shorts with Paladin, and in every case, we put the shorts in the dumpster, in the heap. There were other circumstances where our judgment with regards to what companies we should back was less good, and the shorts won. That's part of the game.